Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome, and welcome back to our regular community. Let's run the numbers. Bitcoin currently trading at 31,354, down 1.57%. Ethereum, ETH, currently trading at 1878, down 2.53%. Let's check out the Ethereum tokens. I'd just like to let you know, if you're new, twice a day, 7 days a week, I share my experience as a full-time crypto trader. My goal is to assist you to become more of a financial blessing to yourself and those you love. Over many decades in the market, I've developed literally thousands of rules. Each rule has cost me money, and that means in terms of either losses or missed opportunities. Rule 178, stop worrying, is one that I found particularly useful. I'd like to share it with you. Peter Lynch, an American investor, ran the Magellan Fund. It was the best performing mutual fund in the world. It was an amazing fund. I remember in 1990, my goodness, I'm showing my age, receiving the Magellan Fund brochures. They were so glossy. If you remember those, please let me know in the comments. That's pretty cool stuff. Peter said the key to making money in stocks, and of course it's crypto, is not to be scared out of them. Now, what does this mean? Let's turn to psychological safety and liquidations. We go through this at least once a day, 7 days a week. We're tracking the price of Bitcoin here. We're overlaying extreme fear, or the fear and greed index, extreme greed, extreme fear, and just taking a note of the sentiment inside the market. Everybody wants psychological safety. What is psychological safety, you say? Really, that's all about feeling safe. People feel safe to go long when the prices are going up and up and up. People feel safe to go short when prices are going down and down and down. What happens generally is that, unfortunately, people tend to buy at the top because they have a fear of missing out, and they tend to sell at the bottom because prices don't go anywhere, or they go like this, as has been happening recently. Literally, so many investors buy at the top and sell at the bottom. Rule 138, all investors become traders when they buy or sell. Returning to psychological safety, investors holding for the long term, perhaps years or months, years, decades, they may get in at this price with an expectation they're going to hold for many, many years, and they keep on accumulating up. And they may think around here, when prices start to come down hard, they've made a mistake, and they may say, oh, I made a mistake, I need to get out, I did it incorrectly. We know that that's about a 50% drop. Now, if you feel that you've made the wrong decision, it would be very easy for you to sell here. Say, for example, you had $200,000 and you put it in here. It halved down to $100,000. You lost $100,000 on paper. But if you lock that loss in by selling, you just lost $100,000. Now, what happens when the market rallies again? And it will. It rallies up, and you say, oh, I got it wrong. I'll put that $100,000 back in, and say you're looking at another cycle like this. Put the $100,000 back in. This is the problem with being sucked in by news and media. What we do every day, twice a day, is we go through and determine the real trend and what's happening under the hood of crypto, and throughout the stock market as well. We really need to know the facts and crunch the numbers. I'd like to do a quick shout out to Joe, who shared this on Twitter with me. Thank you very much, Joe. What you can see by this chart, this is the fear and greed index going back away. You notice that the fear and greed index, this is very, very high fear. This is very, very high optimism or greed. When the fear is so low, it's absolutely the time to buy. Now, this is not how most people think. If we look back to the COVID sell-off, we look down to the immense levels of fear that were occurring here. That was the perfect opportunity to buy, but very, very few people would unless they were professional investors or professional traders. And we know all investors are traders anyway. So how does this all relate to Rule 178, stop worrying? It's important to think almost inversely, counterintuitively to how most people think. If psychological safety is in for all the shorts, people expecting the price to go down, we get greedy there. If everybody's expecting higher and higher prices, we get worried there. We inverse the ideology of putting money in and taking money out. The reason that we can stop worrying and start living, I love this quote, it's so cool. And by the way, fantastic book, written by Dale Carnegie. Look at that, born in 1888. Wow, timeless wisdom. When we stop worrying, we basically say, yeah, it doesn't matter. If you have the knowledge and you've crunched the numbers, you've run the numbers, it's something that you can step back from and say, I know where the trend is going. If you don't do that, if you just pull the trigger, then you should worry a lot, because if you don't know the trend, it's quite possible that you'll get crushed. As we've seen before, people buying at the top and selling at the bottom is the normal way of the market. It's probably useful to think, this is the stock market. So Monday, Tuesday, Wednesday, Thursday, excluding public holidays, of course, in the NASDAQ, these are the normal trading hours, about 6.5 hours per day for the work week, about 32.5 hours per week. Crypto is open 24 hours a day, 7 days a week. It's open 5.2 times longer than conventional markets. There's never any rest. You can look at Bitcoin going up and down and your beloved altcoins going up and down all the time, 24/7 by 365. It's really important to run the numbers so that you can mitigate your worry, anxiety, and stress, and you need to be able to sleep well at night too. This is a really beautiful quote from Corrie ten Boom. Now you ask, Ken, who's Corrie? Never heard of her. She was a lovely person who helped the Jews escape from the Nazis during the Holocaust in World War II by hiding them in her home. There's been many films written about this and created along these storylines. Corrie says, worry empties today of its strength. If she was found out, she would have been executed. This was a very violent time in our past history. You think about what she was saying. What an incredible person. Just think of her and say, when you look at the crypto market, you look at your holdings, and hopefully the losses that you've sustained are on paper. That means you haven't banked them in. But even if you have, just be kind to yourself. You're learning. You're learning how to strengthen. All adversity brings enormous strength with it. It's a great thing to have strength, and it's a hard path to walk to get strength. Let's get into the analysis. We do the T-cubed method, trend, timing, and trigger. This is Rule 174. When I first started trading and investing, it's really 30 years ago, when I did it, I always pulled the trigger first. And why did I pull the trigger? Friends, family, workmates, all those people came and said, Ken, this is a fantastic thing, you should get in. And like a moron, I went, oh, okay, you must know more than me. And I did, and I lost money. And they would say, Ken, this is 1,000 to 1 shot. It's gonna go to the moon. Yeah, wow, I'll put some money in that. Bang. No, 1,000 to 1 shots are literally 1,000 to 1. You've got a very good chance of losing money. Now, if you're going in and pulling the trigger and you're not seeking to time the market and you don't care what the trend of the market is, you're going to make a lot of losses This rule 174 is here to protect you, to structure your thinking. We must always understand the trend before we do any timing or before we do any trigger. Whatever the trend is, we can work with that trend. To go through the true trend, I use the KS process. I use the KS model to understand the psychology of the market segment that we're currently trading at, how that relates to past market segments, and how to predict what is happening with price. We are currently here. We can see Bitcoin has come down. By the way, it's important to understand this is the price of Bitcoin in this chart. Basically, Bitcoin in USD is trading at 31,296 and 25 cents right now. We look at this behavior, we need to look back at past behavior to understand what is actually occurring. Definitions are always important. I take a whole halving cycle from one halving to the next halving, and I just call it, for example, the 2012 halving cycle here, from that halving to this halving. The next halving that occurred in 2016, I call that the 2016 halving cycle. And then it goes to 2020, I call this the 2020 halving cycle. Each halving cycle has a bull market, a bear market, and consolidation. Bull market, bear market, consolidation. We're in the bull market phase. There will be a bear market phase, and there will be a consolidation phase. If you're new to all of this particular way of describing the market, could I recommend that you have a look at the KS model? This is on Medium, and it will go through and discuss the difference between institutional and retail psychology and a lot of different things, and just basically break this particular model into component parts so you can understand it better. A lot of people are feeling really worried about this particular price action. I put the relative strength in here for a reason. I'll show you what I mean. We discussed this a little in episode 129, but I just want to summarize. We can see that the price is decreasing, but however, the relative strength is increasing. It's over that resistance, it's finding support. Now let's look back at the same market psychological phase, which is sunshine, to the past cycle. Here we go. We can see that the relative strength was coming out as the price was going up, and then it started to cross. We noticed this really violent downward spike. That was all the shorts getting liquidated, and they got liquidated and pushed the price up literally 60%, almost all the way to the previous high. Now, what would that look like? That was done in 3 days. If this happened right now, we could get a spike down and a liquidation back up to around 60,000. You can imagine if that happened in 3 days, everybody would be caught completely off guard. We're not saying it's going to happen in 3 days. The nature of an exponential asset class such as crypto and Bitcoin is to do exactly that. According to calculations, we're about 50% of the way to the end of the cycle. There's a lot of past videos that have included the logic as to why that is the case. Let's have a look at what could happen next. What I believe will happen is that we'll get a rally up to this green dot, we'll get a pullback, which is a consolidation basically, and then we'll shoot up to this white sun, and then we'll enter the bear market. And when I say enter the bear market will start with a blow off top and start to come down. In bear market phases, the psychology is overwhelmingly negative. We've had such an exponential ramp up in prices, unsustainable price behavior, that everybody knows it can't be maintained. The price drops are dizzying, but there's incredible value to be made in bear markets. I actually love bear markets. I'm a bear market trader by nature. 7 days a week, twice a day, I do this analysis free for you as a community. I don't sell anything, so I have nothing to lose in just saying what my opinions are. If I felt by the balance of probabilities that we were in a bear market, I would just tell you. There's nothing for me to gain or lose, nothing at all. What I see is going back and doing the analysis, doing the stats, doing the probabilities. We're literally here at the blue sun in the past cycle, which witnessed a sell-off as well, and we're heading towards the green sun, which closed out the 2016 bull market cycle, which is here. The unfortunate thing is that the difference between this blue sun and the green sun was 43%. We would expect from the previous cycle, we would expect at least a 43% gap in this cycle, if not longer. But I'm being conservative. I always prefer to be conservative. Just like you, I'm putting real money into this. As a community channel, I really encourage all the members of our community to share. If they've got any graph, stat, figure, anything that I think that we can use as a community to help you get a better position, I will share it. I would just like to thank Dirk and Frederick for sharing this graph. Now, what does this say? It's a little bit hard to read, unfortunately. I'll get the source of this in a later episode. What it's actually saying is it is looking at the holders of Bitcoin from 1K to 10K Bitcoin, from 100 to 1,000 Bitcoin. And we notice this red area is really interesting. Look, they were selling out as the price was moving up. It's a fascinating thing to get these on-chain metrics and analyze them. And that's what we do every day. We're always looking for anything that will help keep the probabilities on our side. Okay, I'll just read out what is here because it's probably more helpful. But now it looks like most groups have turned back to neutral, actually, and whales are accumulating again since Bitcoin dropped to 30,000. And this is confirmed by so many other metrics that are being shared inside the community and the on-chain data that we look at each day. This particular analysis was shared by Welsh Deb yesterday. It shows the Bitcoin whale holdings going up while the price is diverging. We're seeing a lot of divergences. Whale holdings, what does it mean? The whales basically dumped their holdings and now they've increased them. They know what they're doing. They're very smart people that have been in the market for an extremely long period of time. They don't care about what the news says. They don't think from a retail mindset. They think about really buying sharp sell-offs. This is a very useful piece of on-chain data. Bitcoin number of transfers to exchanges across all exchanges. When the number of transfers to exchanges of Bitcoin happens like this, we're getting ready to see an exponential blow off top and the start of the bear market. Look at where we are right now. Rule 193, check stock markets. This is really important. Even though we're in crypto, there are crypto stocks on the stock market. We need to see how they are performing, as well as needing to see how the major indices, gold, silver, the dollar, bonds, yields, inflation, all sorts of things are impacting. Why is that? Because every day you get so many news stories that will demand that you think a certain way about the dollar going up or down, inflation going up or down, markets going up or down. If you don't have the actual knowledge, you will get led astray. The first thing to look at is to understand where we are in the global business cycle. We're in early stage recovery across the US. China supposedly is a little bit further forward. India, everybody is basically in recovery. Now, what does that mean? When economies are in recovery, they need lots of support and stimulus. We heard from Jerome Powell that everything is going to be exactly as it has been. Stimulus will be in the pipeline, not raising interest rates, and they will seek to get the economy back on its feet. Now, why does it matter what the US does? Because you may be watching from a different country. The US market accounts for around 56% of the global stock market value. What the US market does is incredibly important globally. So let's have a quick look through with a crypto lens on the markets. We're really looking at how crypto will be impacted or potentially impacted by the stock market. Okay, let's get into it. This is the NASDAQ 100. I mentioned, you can see that there's a support line running through here. We know on this channel inside our community, price is always moving in a wave. It goes up and down, up and down. Look at this, up, 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 up. What do you think it's going to do? Of course it's going to move down. It has to move down. It's unhealthy if it doesn't. Now, what is this line I've drawn here? What is that about? I mentioned a couple of days ago, 3 or 4 days ago, that I believe we're going to have a rotation from stocks into crypto. What does that mean? I believe that a lot of people are going to sell here. That will put pressure on prices back to this long-term support line in the NASDAQ, and the money has to go somewhere. I believe it will go into crypto. But why do I believe that? If we go to Case Bitcoin, we can see, maybe I'll just show you this one. The compound annual growth rate of the S&P 500 is 13%. Of gold, 1%. This is over the past 10 years. And Bitcoin, 117%. What this basically says, if you put your money in the S&P 500 for 10 years, it would grow 13% the first year, 13% the second, 13% the third, and so forth for 10 years. If we look at the S&P 500, 13% per year is pretty good. Gold, 1%, okay, well, if you need a safe haven and somewhere to park excess money that you don't really need, this is probably very good as well. Bitcoin is not bad. It's fairly good at 117% per year over the past 10 years, knowing that we've seen so many declines of up to 85% in value into the bear market. Now, what is happening with the S&P 500 and major indices? They are overextended. Where could they go and pop their money into? I don't know, gold, bonds, maybe crypto. Certainly a percentage would absolutely go across. I'd just like to give you a quick summary on what happened yesterday. Q2 earnings season, State Street beat expectations. Refinitiv is believing that there will be around 65.8% growth quarter on quarter. Federal Reserve Chairman Jerome Powell said there'll be no tapering. They're not cutting back on stimulus. They're going to continue to fund the markets. Inflation is temporary over the coming months. A long way to go to fix unemployment. There'll be continued economic support and no change in the policy stance. That is incredibly important. If there's no change, there's no change. We would expect things to consolidate here and keep moving upwards. Now, there's no change, which means crypto can again move again. Let's quickly go through the major indices. The S&P 500 has that strong support. It's pulling down. We just believe this is price moving in a wave. The Russell 2000 had a big uptake, big run up. It's consolidating. It's moving down currently. Let's have a look at the Dow Jones. Same, moving down. Let's have a look at Facebook, coming in to test that support. Amazon, coming back to test this support. Apple, still very healthy, but we always know price always moving in a wave. If you were in Apple stock when it was shoring up here, for example, like that. Oh, it doesn't give a very good indication, but pretend we didn't know what happens to the right. If you saw this shooting up here, you say, wow, it's going to the moon, and boom. This is the nature of price. It's always moving in a wave. This doesn't disturb us at all. Netflix coming back to retest that once resistance, turning it into support. Let's have a look at Google. On a tear. A lot of free air, fresh air up there and there. Microsoft doing very well, but retracing. Now, let's get into the stuff that we really want to look at. We want to look at how Bitcoin is progressing. Okay, let's have a look at the ETFs. So in total, there's about 1,460,162 Bitcoin across ETFs, countries, public companies, and private companies. Let's have a look at the monster of them all, the Grayscale Bitcoin Trust. We're seeing that resistance is being hugged. There was a 2.66% increase in Grayscale's price. That's not bad. The unlock, where high net worth individuals that have put money into their IRAs, their superannuation accounts, for the long term, are probably going to do nothing more than add, because high net worth individuals buy these down spikes. They're not like retail. Let's have a look at MicroStrategy. We've got weakness here. Absolutely. We just call it as it is. Galaxy Digital Holdings with 16,400 Bitcoin is consolidating. Tesla coming down. CoinShares physical Bitcoin showing strength around this particular resistance line. Down a little, but it's still quite good. Voyager, much weaker here than the others. This is why we look across so many. It gives us an understanding of what's happening. The Purpose Bitcoin ETF, we can see that resistance. It's trying to break out. Let's have a look at Square. Square coming back to its support. Mara, Marathon Digital, just broken that support, but there's a lot of support down here as well. Coinbase Global showing weakness. A lot of this weakness was due to Jerome Powell's stance. Basically, people looked at the market and said, oh my goodness, what is going to happen? And it's more of the same, so people can sort of chill out now and relax a little bit. We've got forward guidance. Let's have a look at the Bitcoin group. This is the one I said, keep our eye on this. It's behaving weakly, but still around that once support, now turned to resistance. We look at the Bitcoin Fund in Canada, still under resistance. If things were incredibly weak, we would go to the granddaddy of them all, the most powerful, the Grayscale Bitcoin Trust, and expect there to be a big dip down here. That's not occurred. That makes us feel fairly confident that the others will soon follow. Okay, let's keep on going. ARK Innovation ETF showing weakness. They all follow suit. When Bitcoin repairs, they will all rally. ARKW. Silvergate Capital. They're all following suit. This is a very good thing. Now, what happens when Bitcoin repairs? All of these will rally. We can never time a top or a bottom. We only have to base our analysis on probabilities. Riot, underneath that support. Bitfarms, underneath support. Argo Blockchain. Argo Blockchain did really well, pumping up 17.51%. Very interesting, isn't it? Why is that? Because it's coming into all of this support over here. Price remembers its history. Let's have a look at gold. Gold came up across its resistance. It's now coming back from the retest. That is quite a sell-off, actually. Let's look at silver. Silver was looking strong. It has support running here. It's had quite a sell-off too. Let's have a look at the VIX, the market's fear gauge. There was an increase in fear. Let's have a look at the DXY. You'll get a lot of commentators saying that when the dollar goes up, Bitcoin will go down. You don't see that right now. When the dollar goes down, Bitcoin will go down. When the dollar comes up, Bitcoin will go up. It's interesting. What I've seen across so many years, things go in patterns. They can coincide, then they dephase, then they phase up again. All sorts of things happen. That's why it's just important to look at what is actually happening. With the DXY, it's hitting resistance. It's over a strong level of resistance. It broke out, came back and retested, resumed, hit another level of resistance. The dollar going up doesn't mean Bitcoin is coming down. It's important to understand that when the dollar came up here, Bitcoin was going up as well. Just things that we keep our eye on. It's just having a complete end-to-end perspective that's most important. The 10-year Treasury note yield has been coming down. From that, once support turned into resistance. The 30-year is behaving the same as we would imagine it would. The TLT, the Treasury bond, has rallied over this resistance, turned it to support, come back, done a wave, and going up again. Let's have a look at transportation, defensive area. Okay, we've seen a decrease in this. This could be due to the impact of the Delta strain of COVID-19, basically shutting down transportation. But we can't read too much into it yet because there's a long-term support. It could be nothing more than price moving in a wave. We just keep our eye on it. Utilities, typically defensive, has gone up to this resistance line, has been pushed back, but it's made a very strong play for it. Again, something to keep in mind. The airline industry has been selling off. It still has this degree of support down here. We'd be very interested to see what happens next. Let's have a look at oil. Oil has recently been moving in a wave. There was a lot of discussion about Saudi Arabia and the UAE. They were trying to reach an agreement and they reached one and oil sold off. Okay, that's Brent. Let's look at light crude. It's finding support. Okay, so what do we conclude from all of this? Basically, everything is as it was before. There is a commitment to expand the money supply as they have been doing, which is very, very good for Bitcoin and cryptos. On-chain metrics support the fact that this is just a base and it's getting ready to resume in terms of strength. And we can see from past cycles how quickly a repair can occur. Overall, everything is looking good for crypto. We always have to keep our eye on the market, but the markets are so slow. They move 5.17 times more slowly than crypto does. It's like watching grass grow, but we need to be very aware of what is happening. I hope you found the content useful. Everything I do for you is free. Please be aware of scammers. I do these videos to assist you to be more of a financial blessing to yourself and those you love. We have a Facebook group, a Discord group, and you can always hook in and say hi to me directly on Twitter or just follow me. Let's just have a look at these Ethereum tokens while we're at it. Please say hi and let me know where you are viewing from, and if you have any questions. We have a fantastic community filled with people who are helping each other. They're a very beautiful group of people. Please come across and join us. We'd love to have you there. Always remember that crypto is volatile. Please prepare yourself for the best and the worst case scenarios. Reality will likely be between them. Stay safe out there. Take care and see you next time. Bye for now.